Well guys, unfortunately, people are already bailing on SoFi. So what is the case to bail on SoFi, and is it going to follow the same exact pattern it's done for almost a year now, basically having a nice run up and then coming straight back down? Or are we in for a Palantir style run where it just kind of keeps running and runs up to that next level? So let's discuss all that today, right after you gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. And if you wanted to see my 10 buy alerts on SoFi in the $4 range in real time, and you wanted to see my watch list complete with price targets, we got 5 courses you can take for free. We got a stock analyzer tool that's coming for members that's completely free for them as well, and a ton more. Make sure you check out the pinned comment down there as we kind of extended the flash sale through this week. You guys kind of asked for it, so not a problem. We'll extend it through the weekend. Just make sure you check out the pinned comment down there and get your spot. All right, so this was all kind of triggered from this Seeking Alpha article right here up on the screen that I'm putting up. And you know, you guys got to kind of understand Seeking Alpha's business model from the start. They basically give you a bull and a bear case all at the same exact time. 2 different articles there. I always love it whenever our group members basically will post, you know, both of them. Sometimes it'll show up in their emails or in their feeds like back to back. You know, it'll be like, SoFi is the worst stock ever. Then SoFi is the greatest stock ever. Buy now. You know, they'll just be right there back to back. And you're just kind of like, huh? What? Why would they do that? You know, what's the deal there? And it's part of their business model. Their algorithms, their tracking systems, whatever the heck you want to call them, is tracking what you click on. And more importantly, they can always point to an article and say they were right. If SoFi goes up, they can say, hey, look, we were right here. Refer to this article, this article, this article. And if it goes down, same exact thing. Hey, look at our article right there. We told you it was going down. We told you it was going down. If you cover both sides, you're always right, which of course makes it a little bit easier to sell your product based upon what type of articles you like to click, whether they be the bear or the bull articles. So that way you kind of feel, oh man, yeah, they do get this right a lot. Man, they must have a real feel. Their research must be top notch. And, you know, they encourage you to buy whatever the heck products they have. I don't have any problem with it. I don't necessarily like the tactic. You know, I don't like when other folks do it too, you know, where they make 475 predictions, you know, in a month. And of course, well, yeah, if you predict 475 different things with a bunch of different stocks, with the economy and with everything else, of course, some of them are going to be right, especially whenever you cover, you know, one side or the other. Of course, you're right every time because you covered both. But, you know, not my style, not necessarily like I want to do things, but it doesn't mean there aren't things that can't be gleaned from the article and that there isn't good information in the article that we need to consider. So let's kind of dive into the points here and we'll kind of go point by point from the article and discuss each. So that way we can see if there really is a case to sell SoFi right here or not. And honestly, guys, I'll give you exactly what I would do if I was just starting, exactly what my plan is currently with SoFi, and exactly how I've handled this situation before in the past as well. So we'll kind of wrap all that up here as soon as we kind of get through the bullet points of the article. So the first reason why he traded out of the stock was simply to book profits. And guys, that's just a trader move. If you're a trader, that may very well be the right move. I don't know. I'm not a trader. I don't care. It's just not what I do. So for me, that wasn't relevant at all. Awesome. You book profits. Great. I get it. Nobody's ever lost any money booking a profit. You know, they have paid, however, 40% taxes, and they have, however, missed out on hundreds of thousands of percent gains on stocks that if you just would have held, that's what would have happened. But, you know, hey, nobody's ever lost money booking a profit, right? I got it. And I'm not knocking traders either. I apologize. It's just not my game. It's not what I do. I'm a long-term buy and hold investor. So that point right there really didn't help me out a whole lot. The second reason he gave was the fact that the stock was just basically at fair value now in his opinion, which again, that to me kind of seems baffling, right? I'm still okay buying stocks whenever they're at fair value. That means they're being fairly priced right now. And even if I was a trader, stocks get overvalued a lot. They run up past fair value periodically. It's not every time. It's not all the time. I'm not trying to say that at all. I'm just trying to say that there is plenty of times where stocks run up well past fair value on a trade. And, you know, man, you've left a lot on the table if that's your strategy is basically, hey, I'm going to hold on to that stock until it hits fair value. And then when it hits it, I'm going to sell it and get rid of it. Okay, to me, as a trader, you probably left a lot of money on the table, more so than you would have lost if you wouldn't have got out of the trade right at fair value in order to do that. So that's a strategy thing. Again, it's a trading strategy thing. And it's something for me, okay, great, stocks at fair value. I'm still comfortable adding stocks at fair value, especially if I'm still building out my position. That's okay. Doesn't mean I'm going all in at fair value or anything crazy like that. But for me, that's not necessarily a reason for me to sell a stock. That's not a reason I ever sell a stock is because, well, it's at fair value, therefore you sell it and just wait for it to come undervalued again. Again, it's kind of a trader style move there, and I don't even know what the point in creating a fair value would be if you're trading the stock in the first place. So I don't know. It's one of those things I don't really see that as a move that I would make or something that I would basically base a major decision like selling out of a stock on. But what I actually found odd about the article is honestly about 3/4 of it, maybe a little bit more, maybe 80% of the article or more was all basically the bull case for SoFi that made me actually want to hold the stock more instead of selling it. It was basically things, the easy stuff like, the student loan moratorium, whatever the heck, all the other craziness with that finally coming towards an end, and finally, having some sort of a resolution so that way, SoFi can move forward. In regards to that, again, for me, that's a cherry on top. Make sure you check out the other videos I've done on SoFi. If you kind of want to hear my thesis on that and why I don't count that in regards to anything else going on with the stock right now, because they have successfully transitioned to business. They discussed the high credit standards, basically making them a lot less risky than a lot of the other fintech plays because they've maintained their high, risk profile in regards to their borrowers over this entire time. Matter of fact, I think they've actually improved it a little bit. So again, that's another good thing for the stock. That's something that makes me even more confident in the stock than it was before. It talked about other efficiencies with their capital markets, with their vertical integration, with the way they are able to take advantage of higher interest rates better than their competitors because of some of their cost efficiencies that they have, because of some of the things they gain from the vertical integration that actually make them more profitable and able to better take advantage of this than their competitors. He pointed out that they're basically outrunning their guidance for revenue and profitability already this year. So as a long-term buy and hold investor, these are all massive positives that get me more excited about the stock, not from a trading standpoint, but from a long-term buy and holder, investor perspective. This is exactly what you want to see this company doing, which they've been doing honestly for more than a year now. But this is further proof that they are executing on a very high level. And this is a bear article, and they're basically making the bull case for the stock. So, it just kind of seemed kind of unusual. And then after that period of time, they finally got down to the technicals. And the technicals were basically saying, hey, the stock is overbought, which I can't argue with that. The stock is absolutely overbought. It has been for a little while. And guess what? Everybody thought Palantir was coming back down too because of the technicals, because it was overbought at $9. Think about that for just a second. The right trade and Palantir was at $9. Now, I'm not saying SoFi is going to blow right through it the way Palantir does, but the point is the narrative and the technicals pointed to the same exact thing with Palantir that it did with SoFi. Now, I agree, SoFi is not profitable like Palantir is. They're on their way, obviously, but they're not there yet. So I'm not disagreeing there. But the smart trade was to get out of Palantir at $9. And, it ran up well over $15, $16 or so. And who knows where it's going to end up in the end. Maybe it does come all the way back down to 9, which was, by the way, where those folks sold it. I believe they had it coming back down to 7 or so. Doesn't matter. The point is that that's what technical analysis told them, and it was wrong. And the point I'm trying to make is sooner or later that's going to happen to SoFi too. It's just a matter of time because they are executing. So the question becomes, how do you handle that scenario? What do you do in those scenarios? And how do you kind of, take advantage of it whenever you want to take advantage of it and have a plan? So I'm going to cover a couple of things here for you guys. But the first one is to simply have a plan in the first place. I did my due diligence. I did my work on this. I did my homework on this. I watched after quarter after quarter after quarter. They continued to execute, but I kind of knew, hey, they're not near profitability yet. And we're talking last year, guys. They're not there yet. The stock would go on a nice little run, just right there with the market, and then it would come right back down. And every single time it got into that $4 or $5 range, I was adding shares to it because that was my plan. And I did that, basically 10, 12 times over the past year or so before it finally went on its latest run again. Nothing fancy, nothing crazy, just a simple, hey, when it gets down to my price target, just like we talk about, do your valuation, get yourself a price target. As soon as it hits my price target, I just start DCAing down in the stock for as long as Wall Street wants to beat it down. If they want to continue to beat it down, I'll continue to feed money into it as long as they continue to execute and show every single earnings call made me more excited to buy more of the stock, and Wall Street just kept giving me gifts and giving us gifts and giving us gifts. And I continued to buy, and so did a lot of you guys out there, and congratulations to you guys out there doing that. And I'll be honest with you guys, if you haven't started that yet, you didn't do that last year, I understand completely. It was all kinds of chaos and noise and everything else, but you basically got to do it right now. You've got to get started. You've got to create your plan. You got to do your due diligence. You've got to, set your price targets, and then basically figure out how you want to buy this stock. What are you going to do if it runs up to 12, 13, 15, whatever the number is? What are you going to do if it falls back down? Are you going to buy it at 7? Are you going to buy it at 6? If it gets down in the 5s or the 4s, what levels are you willing to start adding on? And if that seems overwhelming and it seems like a lot, and you want to kind of maybe take time to assess this and evaluate, but you also don't want to miss it right now, you want to start buying, just a simple DCA on a great stock is all you have to do. It means you may be buying at a hot price right now. Who knows? Nobody knows. That's the whole point, but that's the point in the DCA is, if it's a hot price right now, it's coming back down, don't worry. You're going to have plenty of time to average yourself down. That's what the point of a DCA is. You're buying on the highs, you're buying on the lows, and you're buying everywhere in between. So that way you're removing emotions. You're just buying on a schedule and let Wall Street do what Wall Street's going to do with the stock. It's very similar to what I do. I just do a modified DCA. It's exactly a DCA. I do it based upon fair value, where I feel fair value is at. And obviously, as I continue to add shares and I continue to add shares, I'm able to effectively move that price target around to where I'm able to add at levels that I'm comfortable at. But I have a plan. I'm working through my plan, and I'm going to execute to that plan. Now, you do have one other option, and unfortunately, it's the option that's pushed the most out there, especially on YouTube and with the media and everybody else, and that's you can be a market timer. And being a trader or one of those other long-term buy and hold traders or whatever the heck else is out there, you can try being one of those. I mean, those were the same folks who were telling you to sell Tesla at 120 because it's definitely going to 80. Some folks had it at 60. Got insane there. That same exact folks were telling you to sell out of Palantir at 9. You know, a lot of other folks were telling you not to buy Meta at 80s because it's dead, or Google in the 80s because it's dead, because ChatGPT is going to kill it. And then you had a lot of other folks out there telling you not to buy any stocks, despite the fact stocks like SoFi were in the 4s, and a lot of other great stocks like that, because, you know, this macro chart said that, and this, you know, graph says this, and, you know, 100% of the time, 30% of the time, the market always crashes when these things flip and this thing inverts. And it just went on and on and on and on with all this different noise. And that's what happens when you try to time the market. That's what you end up listening to. That's what ends up, you know, building the narrative for what you do. And it's just not a good strategy. Just a simple DCA is all you need to do in the end on great stocks in order to have a great portfolio long term. And if you wanted to see my 10 buy alerts on SoFi in the $4 range in real time, and you wanted to see my watch list complete with price targets, we got 5 courses you can take for free. We got a stock analyzer tool that's coming for members that's completely free for them as well, and a ton more. Make sure you check out the pinned comment down there, as we kind of extended the flash sale through this week. You guys kind of asked for it, so not a problem. We'll extend it through the weekend. Just make sure you check out the pinned comment down there and get your spot. And click this video here if you want to see the stocks I'm buying, and click here if you want to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.